What's up, everybody? Nate here. So in the United States, we have seen historically high everything over the last couple of years. I'm talking historically high prices, historically high markets, and of course, historically high inflation. And we are starting to reach the summer of 2022. Things are looking brighter as our employment is getting a lot stronger. Businesses are starting to open up again, and there is a possibility that we could have a sunny future. But all of that actually has billionaire and CEO of JP Morgan Chase, Jamie Dimon, worried about the future of our economy. All the way back in 2020, Jamie Dimon warned us about the potential dangers of the pandemic and basically said we need to shut down our economy right now for the foreseeable future. And as recently as just a few months ago, he said that World War III had basically started because of the Russia-Ukraine conflict. Now in 2022, Jamie Dimon is back at it again. He's saying that Americans and businesses need to get ready because a storm is coming. In his mind, a long period of market and price volatility is coming for the United States, followed by one of the biggest economic crashes in American history. And to Dimon, this isn't just a storm that we can weather. This is an outright hurricane. Now, the two major factors that Jamie Dimon is most worried about is, of course, one, the Federal Reserve, and then two, the Russia-Ukraine war. So today, we're going to talk about exactly why Jamie Dimon is worried about those two things, how all of this is going to affect our economy, and what we can expect our economy to look like after all of this is over. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free, and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that, and now let's start with number one, the Federal Reserve. Now, Jamie Dimon is very worried about the Federal Reserve and its future policies and the effect they're going to have on our economy. But Jamie Dimon is most concerned with the Federal Reserve and what they've already done. He believes that all of the money that has been poured into the New York Stock Exchange was way too much. And he believes that all of this is going to affect businesses and our economy negatively in the future. Basically, when the pandemic started, the Federal Reserve decided to step in, and they provided a ton of stimulus for Americans and Wall Street and dropped their benchmark interest rates to 0%. Now, this was designed to stimulate the economy because millions of Americans and businesses could go out and spend. It was a lot easier to get a mortgage when interest rates were at 0%. You were going to save hundreds of dollars every single month in your monthly payment. But now in 2022, all of that has abruptly stopped. The Federal Reserve has started to sell off a lot of its assets, whether that be corporate bonds or treasury bonds. And it's racked up a balance sheet of around $9 trillion. In addition, stimulus is going away and interest rates are starting to rise for Americans. All of this creates a pretty serious problem in Jamie Dimon's eyes. Basically, Dimon believes that none of those policies effectively worked because now we are on the brink of a recession in the United States. All of that helped in the short term. So Americans were able to spend, Americans were able to buy things and circulate money throughout the economy, but that also meant that inflation got a whole lot higher and eventually that money had to go away. So now that it's going away, somebody or something has to fill in the gaps. We have not seen quantitative easing like this in over 50 years, so the Federal Reserve has not stepped into the market this much in a very long time. Now they effectively have to pull all of that in order to start lowering inflation. You have to lower the amount of money that's circulating throughout your economy in order to bring down demand. In his mind, that will crash anything, and the worst part is they don't really have a choice. Immediately, Americans are not going to be able to go out and buy all of the same things they could, which means the mortgage market is going to come down and the auto market is going to drop too. Americans, because of inflation, just don't have as much money as they did back in 2020 and in 2021, and that goes for businesses as well. Businesses in our economy have a lot harder time investing and growing because there's not as much liquidity out there. The Federal Reserve was buying all of these bonds that propped up businesses, but now that they're all going away, they basically need somebody to step in and continue to purchase these bonds. The stock market wants all of the same money. To Jamie Dimon, that is just not going to happen, and there's two major reasons why. Jamie Dimon mentions that back during the 2008 financial crisis, there were a few major components on why the stock market exploded back then. We had central banks and big corporations and other investing firms putting a lot of money into treasury and corporate bonds. They were propping up the stock market after the Federal Reserve started to exit that crisis. But in 2022, that is not the case. The Federal Reserve printed way too much money. They bought way too many bonds, whether it be treasury or corporate bonds, and way too many mortgage-backed securities. Businesses, whether it's a central bank or anybody else, is simply not going to be able to fill in the gaps enough to prop the stock market back up. There is just not enough money to do so, and Jamie Dimon believes that even if there was enough money, they wouldn't want to do that. The biggest reason is because of inflation. The United States economy back in 2008 was crashing, and that affected a lot of other economies, but it wasn't the same. There were other economies that were starting to do a little bit better. They were growing on a separate level. So they had the money to pour into our stock market and gain a whole lot of debt for the United States economy. But pretty much across the world right now, every major economy is sinking because of inflation, because of the war between Russia and Ukraine. So they just don't have the money to pour into the US economy. So the Federal Reserve is left with the difficult choice. They have to continue to tighten and continue to tighten and continue to tighten their monetary policies until there's just no demand left in our economy. I mean, before the pandemic started back in 2020, the United States had around $3 to $4 trillion. That's according to the M1 money supply submitted by the Federal Reserve. But now in 2022, we have over 20 trillion. That is a lot of money, and the only way to get us back to a normal level is essentially to cut off everything until we're back to a normal rate. And according to Jamie Dimon, that could end up taking years. And remember, around 70% of our economic growth, or GDP, is measured by consumer spending. So if Americans aren't spending, then that runs us into the same problem that we had back in 2020. That is the only reason that Congress and the Federal Reserve had so much stimulus in our economy. They wanted Americans to go out and spend. They wanted businesses to go out and spend too, so that way our entire economy grew despite the pandemic. It was all artificial though, and now we're running into the same problems. All that did was buy us some time. And of course, number two, Jamie Dimon is worried about the war between Russia and Ukraine. Now, one of the biggest financial catastrophes that has come from this war is oil prices. Oil prices in the United States and across the world have been over $100 consistently since the conflict began. And Jamie Dimon believes that they're going to go even higher, close to $150 to $175 a barrel. That could send gas prices alone in the United States up over $1 per gallon. And it's going to make energy prices a whole lot more expensive, bringing inflation up even higher. Energy holds around a third of the consumer price index. The CPI report is, of course, how we measure the inflation on a month-to-month basis. It takes a basket of all goods and services throughout the entire economy, measures their price today, and the price change month over month. Gas alone has exploded over the last 2 years. Part of that is because of demand. Obviously, gas prices were super low in 2020 because nobody was really driving, but by the middle parts of 2021, people were starting to go back to work. People started to travel, so we needed a whole lot more oil. Russia is one of the biggest producers of oil in the world. Same with natural gas and some precious metals. The United States and other countries use a lot of those resources to make products or to create energy, and if they don't have any of that, well, then inflation is going to go up, and industries related to those resources are also going to raise prices. Not only that, but Jamie Dimon is worried about wars in general. He talked a little bit about this just a few months ago, but he believes that wars will just continue to escalate. And he thinks that the United States is not doing enough to protect Europe and our own interests right now. The conflict between Russia and Ukraine is only escalating because now you have the United States passing bills to send hundreds of billions of dollars more to Ukraine every single month and supplying them with more weapons and missiles, which Russia believes is a direct conflict with their country. If this was to bleed into a bigger conflict, well, then that is going to change everything about every plan that the US and the rest of the world has. And it could mean a much longer and a much more gruesome war is coming. That doesn't help anyone. And all that would lead to is a major tragedy. A tragedy on top of what's going on right now. But the bottom line here is this: the Federal Reserve can't really get us out of it this time, and that's Jamie Dimon's major concern. We have this war between Russia and Ukraine. We also have rising inflation and all of these economic problems like supply chain issues because of the pandemic. Federal Reserve did a lot of easy money policies in 2020 and in 2021. It was easy to lower interest rates. It was easy to print trillions of dollars, but now they can't do any of that. So if we run into bigger issues, what exactly is the Federal Reserve going to do? He's worried that they can't do anything. So if the Russia-Ukraine conflict gets a whole lot bigger and really starts involving the United States, well, the Federal Reserve can't backtrack now because inflation is already getting worse. If they were to lower interest rates, well, then that means inflation is going to go up, but inflation is still over 8.2%. They could print a whole bunch of money, but again, that would cause inflation to go up, and they could go back and buy more bonds on the stock market, but again, inflation would go up, further creating more supply chain problems and higher inflation. Wages will have to go up. Inflation will also go up because prices are rising for businesses and consumers. That would mean a reset of everything they've already done after having all of these issues to begin with. So the Fed and our United States federal government is backed into a corner. They have no choice but to forget about the economy and raise interest rates until inflation has leveled out. That's going to mean that businesses and supply chains and Americans feel a whole lot of pressure for a very long time. Investors right now on Wall Street are trying to find the next best thing that's going to make them money. They want to find something that can protect them, which they found out is not tech stocks, which they've found out is not cryptocurrency over the last 6 or 7 months or so. So that is the long-term volatility that he's talking about. And then this is followed by the crash that he also mentioned. One of the biggest crashes ever because demand is so low and there's just no money circulating throughout the economy. Everything is getting too expensive, so Americans can't buy anything. So with that being said, what exactly is our economy going to look like? Is there anything that Americans or businesses or the Federal Reserve can do at this point to prevent everything that Jamie Dimon is worried about? Well, the short answer is not really, because like I said, a lot of that money is already out there. You can't bring it all back now. And again, a lot of other countries that helped us during our last financial collapse are not going to help us again. Businesses are reeling. Central banks around the world are reeling. They can't afford to help the United States and our stock, business, and market crises. The Federal Reserve is doing what they need to do now. They should have started a whole lot earlier, but they're starting to reduce their balance sheet. They are starting to raise interest rates to eliminate a lot of that demand. The only thing we can do now is prepare our own individual finances for a potential crash, whether it happens or not, and of course, hope. There is a chance that the war between Russia and Ukraine could end. There is a chance that OPEC and other nations could increase their oil supply, so that way we have a whole lot more oil and energy prices start to come down. In addition, if American consumers continue to spend at a good amount and sentiment continues to rise, then our GDP will continue to grow because Americans still have money. All of that kind of depends on how inflation goes though, because if inflation continues to rise, then Americans Americans are going to have less money, but if inflation comes down, now Americans have too much money and they're going to buy too many things. But that will be at a natural level since now it's out of the Federal Reserve's hands. That could help a lot of businesses to start growing again, start producing a lot more, easing a lot of our supply chain issues. That creates a whole lot less work for the Federal Reserve because if our economy is healthy, then they can continue to raise rates. But they have to be able to prove that demand is going to stay steady for everything. And right now, that is definitely not the case. The stock market is tanking because investors are worried about losing a ton of money right now. Businesses are not able to make a lot of sales, meaning that Americans aren't buying as much. So again, it's good to be hopeful, but what you really need to do is make a better financial plan that can prepare yourself for a potential crash. Nobody knows exactly what's going to happen. Jamie Dimon doesn't know exactly what's going to happen in the future, and neither do you, and neither do I. So the best thing that you can always do is prepare for whatever happens. That way, if our finances are okay and they can survive a crash and a potential recession, we can focus a lot more energy on things that don't have to do with money, like ending human suffering from these wars and trying to better ourselves and our community. And I think we would all agree that that is a whole lot more important than counting money on a spreadsheet. But now I want to hear from you on this issue. What do you think about Jamie Dimon's concerns about the United States and world economy in 2022? Do you believe that the Federal Reserve and the war between Russia and Ukraine is going to cause a period of long volatility and one of the largest crashes in American history? Or do you think that the Federal Reserve, our United States government, and world economies throughout the planet are doing what they need to in order to lower inflation and get our economies back on track? And we are not going to see a crash anytime soon, and Jamie Dimon is wrong. Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.